You know, it's kind of depressing that most of you guys will never understand what it actually takes in order for you to become a profitable trader. Now, these are not just cherry-pick setups. This is what actually is going on in my mentorship, and people have been killing it using the exact strategy that I'll show you right now. Passing profit challenges with this is also no problem, but most importantly, I have a 95% win rate. Now, but we first have to understand what you are currently doing in the live markets. Now, it doesn't even have to be a specific pair, a specific time frame. Let's just go over what you're currently doing, and I'll tell you exactly why it's not working for you. Now, what are you currently doing? Let's just say that you have marked out some kind of high, right? And you want to trade into it, and basically you're going to take it long. Now, the problem with that is, first of all, your stop loss is way too narrow. But let's just say you're going to take the setup like this onto this high. Most of the times what will happen, you are actually right in the direction. But before that ever happened, you just got stopped out. So doesn't that mean that we're just right on the price, but we are just wrong timing wise? Comment down below if this has ever happened to you. Look, you have to make trading as simple as possible. It can be very complicated or it can be extremely simple. Now, the only way to understand this is basically just going back to the fundamentals of trading. What is trading to begin with, and what are you doing constantly on the charts? Now, first of all, the charts are two things and two things only, guys. It's no indicators, and there's also no math or AI behind it. It's just two things, guys. It's time and its price. Now, in the example that I've just shown you, you are right on the price. You knew that we're going to go for a certain high or low in that sense. So once again, if you're going to take these kinds of trades with a near stop loss and a very wide take profit, you'll just get stopped out before your trade ever hits the take profit. So by logic, wouldn't that mean that if we're just going to increase the stop loss, our win rate will also be skyrocketed? Absolutely. That's the point of the video. You should not focus on having a high risk reward. You should focus on having a high win rate. Now, I'm not trying to basically sugarcoat it, right? A risk reward and a win rate is heavily tied to your performance. So basically, the higher the risk reward, the lower your win rate is going to be. The lower the win rate, the higher the risk reward. Well, at least in most cases. But what most of you don't understand is that if you're going to trade a high risk reward strategy, your win rate will be extremely low. Now, you might be saying, but if I'm able to make 10% while only risking 1%, then I'm okay having a low win rate. But what does it actually mean having a low win rate? If you're going for a 10 RR consistently, that means that you probably don't have something above a 20% win rate. It's not possible. I don't care what you see on TikTok or anything like that. It's not possible. Will never be possible consistently. You might have one lucky win where that is going to happen, maybe two, maybe three, but you will not be able to do this consistently. So let's just say your win rate is 20%. You can expect to lose 11 times in a row, and it's basically guaranteed. You see that after 3 wins, it's 100%. After 8 wins, it's 100%. Now, this is over a 50 trade period. If you're going to do 1000 trades, you can even expect to lose 20 times in a row, because this entire list doesn't even extend. Now look, this is my personal journal and also my personal backtest. Let's firstly go over the entire backtest. Let's just say that you have these kinds of statistics in your strategy. You are the only guy that has ever lived on this planet who was able to achieve a 95% win rate like me, but the difference is you were able to do this with a 10 RR. Well, my question to you, and not only to you, but everybody who you admire and have ever watched that is doing these things, where are their payouts? I have never seen a guy doing 100 RR trades consistently and having a lot of different payouts from prop firms or just personal account accomplishments. In the case where you're telling me that you have seen people doing 10 risk to reward trades, and that has already happened a couple of times. Now look, if I'm just going to close my eyes, so basically this is a 1 for 10 risk to reward. I'm just going to close my eyes and copy this position anywhere in the chart. Eventually I will hit that 1 for 10. It's inevitable, right? If you're just going to take a lot of different tries, eventually I will hit that 1 for 10. I've actually hit multiple 1 for 10s, but the difference is just that I'm not going to show you the other 100 different losses that I've taken before I have achieved getting that 1 for 10 did it take profit. Now, you may or may not say, well, with a negative risk reward, it's the same case. If you're just going to take random positions, you will also win a lot of trades. And that is exactly the point that I'm making here. This is exactly why you should also trade a negative risk reward if you're looking out for sustainable growth over time and not just that 1 for 10 risk reward, and then you'll just get into a losing period for multiple months until you eventually hit that 1 for 10 again. Because this is basically the same scenario in here. If I'm going to close my eyes, I am also going to hit a lot of different wins. But this is way more sustainable, even though I'm just taking random positions on the trade, because a negative risk reward strategy is made for these kinds of things. So how does a strategy work that achieves a 95% win rate? And it couldn't be way more simple than that. Now, I am going to flip basically everything that you have learned so far upside down, but you'll get it very shortly simply because this is how trading is meant to be. Simple, easy, and repeatable, and not the BS that you have been trading so far. So first of all, we are going to go into the daily time frame, and I'm asking myself a very simple question. Are we going for the previous day high or for the previous day low basically? If the answer in that case is I don't know, because you have some kind of uptrend or downtrend going on and you just can't tell, then you shouldn't trade that day to begin with. You should always know where the daily bias is going to be. Now, and here's the next big misunderstanding that is holding you back in order to actually make profits in the markets. You see this entire price action, right? This is a consolidation phase. You have been told that consolidation phases are wrong, you should not trade them, and it's bad. But why is it? It's because if you're going to take a 0.0001 stop loss, then of course you're just going to be stopped out in a consolidation phase. With a negative risk to reward, it's a different story. In the consolidation phase, that's where the strategy shines the most. So in here, we have identified that we want to trade into the previous day high and not to the previous day low. So now we'll basically drop down onto the 4-hour time frame. And from here, we want to look out for more liquidity. Now, liquidity can basically be anything. It can be an FVG, it can be relative equal highs or lows. It can even be session highs or lows, although I personally don't trade that. But I'm not only trying to give you a strategy that works, but also a perspective on the market. So in this case, we have identified the relative equal highs because all of these swing highs are relatively equal close to the original one. And also we have even more internal relative equal highs in here. So that is basically a magnet to go on to the upside. But what else is there that we can also spot on a chart alone? We also have an FVG on the 4-hour time frame, which price has fallen back into. This is not just useless information, but this is actually telling us that the market will most likely not revisit this low again. Now, and if you have paid attention, I am not looking out for some kind of level on the left that has been taken out because this is essentially liquidity or something like that. I don't look out for these kinds of random things because any swing low, any swing high can be liquidity. Identifying which one is going to be the major liquidity point is basically a subjective method. I'm looking out for more mechanical ways so everybody can replicate it. So now we'll basically drop down onto the 1-hour time frame, and from here we're going to take our regular position as always. Basically, we want to trade into the previous day high or also the relative equal highs, depending on where the price action is heading. Mostly, I always just go for the previous day high, especially if these are already relative equal highs, which are internally. And then my stop loss is going to reside right at the protective low. Now, in this case, this is even a higher risk to reward than I usually would be taking, because usually the risk to rewards go from 0.2, 3, or something close to that. And as you can see, I was not right timing wise. The price has been going into a little bit of drawdown before it actually reached my take profit. And this is exactly what I'm trying to teach you in here. You don't need to be perfect in order to make money. You also don't need to be a master in this entire thing in order to make money. Now, I'm going to be honest with you. There's basically just one way in order for you to become a profitable trader. But that one way still has 2 paths which you can go. The only way to be profitable is basically having enough data to back off your strategy. Now, what did I mean by having 2 paths? Either you can obtain the entire data yourself, or you can just simply take data that has been already collected. Now, in this case, this is just a few of my different backtesting sessions that I have taken, and the results are quite favorable. Now, but forget about the profits that I have made within just a couple of months of trading this simple strategy. The reason why I want you to also trade a negative risk to reward for your own goods is because you are basically not going to lose. What person is going to bet that you are going to lose 3 times in a row with a 95% win rate? Personally, not me, of course, because anybody betting on that is just insane. Now, remember the trade from earlier. Let's just assume that I had taken a short in here and this has ended up in a loss, because it's also a very big misconception that I see a lot of you guys be making. You think that one loss will wipe away the entire profits that I've been making for months. Wrong. First of all, why are most traders risking 1% to begin with? Now, I don't want to annoy you with this image, but it's just very important to understand further the things. Why are most traders risking 1% per trade? It's because they can expect to lose 10 times in a row, and the entire profit from account is just gone after 10 different losing trades. Because take it this way, you are not even safe of 10 times in a row with a 60% win rate. Now, it's quite unlikely that you are going to lose 10 times in a row, but you can expect 7 or 8 losses. That is acceptable. That is why most traders only risk 1% per trade. Now, but here's the difference. A negative risk to reward trader such as me with a 95% win rate, and you don't even have to take it into that of an extreme level. If you even just have an 80 or 85% win rate, that's already more than enough. Are you really going to lose, let's just say 5 times, or let it even be 3 times in a row? Probably not. So that means that we can also risk 3% in every single trade that we're taking. So let's just say you're a high risk reward trader, or it doesn't even have to be extreme with 1 for 10. Let's just say you're keeping it very simple with 1 for 3. Okay, that also means that your win rate is going to be lower, as we have just seen. Let's just say you're going to trade this kind of system and you're going to hit a loss. That is completely expected and normal, right? And you're going to hit another loss. It's also normal. But eventually you'll also hit that win with a 1 for 3. So basically you have recovered the previous 2 losses, and also you're in a net profit. If you have risk 1%, you lost 1% here, lost 2% here in total, and now you're basically up 1%. Since you have risk 1% per trade, you're also only up 1%. But the guy who simply just doesn't care whether we are in an uptrend or downtrend consolidation phase, he is just focusing on a high win rate and just trading a negative risk reward. He is simply risking 3% on every single trade. He is already up 3% while you are still waiting for that 1% profit. Now remember how I've told you previously, if you're trading a negative risk reward, you are not time dependent. This explains my strategy, which I'm using on a day-to-day basis, perfectly. Because you, as a guy who is simply just working a 9-to-5 job, because you are just simply not at this level where you're a full-time day trader, you are tied to a specific time of the day, which is basically New York session for most of you guys, and you're just simply not able to trade during that day. Why? Because you're at work getting the money in order to become a profitable trader. A negative risk reward trader doesn't care about all of that. You're trading whenever you see a setup forming. That can be at midnight, at 1 p.m., 3 p.m., whatever it's going to be. Because remember in this example, no matter when we are going to take a trade, it just doesn't matter, as long as our stop loss is wide enough. Now for specific stop loss placements, I've already done other videos. But my point in here is that no matter when you're going to take a trade, you will not be stopped out. You just have to wait a little bit longer if you're just very off on the timing. So basically, if you're going to enter very early, then that means you just have to wait longer. I am not saying that you should completely ignore the time aspect of trading. Try to time it as well as you can, but most importantly, don't try to be perfect. Now, the next argument that I see a lot of traders are making when they see a negative risk reward, they be asking, how are you going to pass profit from challenges with this? First of all, I am not risking 1% on every single trade in order to pass the entire profit from challenge, but I am risking 3 or even 4% on every single trade that I'm taking. So by logic, so does that mean that it takes more time in order to pass the profit challenge doing it with a negative risk reward? I'm going to admit to you, yes. But do you really have to pass a profit challenge within just one trading day? Probably not. But even in the case if you want to pass your profit challenge in just 1 or 2 trading days, depending on the prop firm, I'm going to pass the profit challenge for you within 1 or 2 trading days, depending on the prop firm. And in case where I don't pass, you'll not only get the money back that you have paid me, but also the prop firm in order to get the challenge. It's all in the description down below. The most important key takeaway from this entire video is that you can even make money even if you're actually wrong in the entire trade. You don't even have to be right in order to make money, and that's exactly how trading should be. You shouldn't be right all of the time in order to make money. You want to be paid also when you're wrong, and that is only possible with a negative risk reward. Now, if you want to understand exactly how this entire strategy works, I'll break it down for you in this video. It is going to explain to you everything from price action all the way to market structure and order how to execute this on a day-to-day basis. If you have still not clicked on the video, then like the video, subscribe to the channel, and comment down below if the example that I've shown you in the beginning has ever happened to you recently. Thank you guys for watching. See you in the next one.